We're glad to have you back. United Bank for Africa, UBA PLC, has been the most active stocks at the Nigerian exchange in recent times. Last week, it led the market, and weeks back, allowed 15% growth in turnover with steady pricing trends that's above average market trend and peers' performances. Globally, volume of activities is indicative of stocks ranking and a measure of investors' perception or reaction. In markets pricing mechanism, change in stock price is tied to volume. Turnover of activities underlines the resilience of a stock or the entire stock market, especially during a bearish period. Well, there's an analyst consensus on remarkable growth in UBA's operations and results. Independent investment advisory reports are conclusive about the upside potential of the bank. Let's dig deep into the fundamentals of the 75-year-old financial institutions with operations in 20 African countries. UBA has established itself as truly Pan-African bank. Mr. Ugodre Obi Chukwu is the Chief Executive Officer of Nairametrics. He joins me via Zoom to continue this conversation. Good afternoon. It's really good to have you on the program. Can you hear me? I can hear you.
I can hear you.
Oh, good. Great. We're good. Now, let's start with the recapitalization thing about the banking industry. At least let's stay with the general banking sector before we delve into UBA in focus. With the latest recapitalization plans in the banking sector, what does this really mean for the overall stability and, of course, growth of Nigerian banks?
Yeah, I mean, if you recall, the central bank had announced earlier in the year that it wanted banks to recapitalize, and this was all part of achieving the 1 trillion GDP target that President Bola Ahmed Tinubu had set for himself and, of course, for his cabinet. And I think key to achieving that goal was banks recapitalizing. A lot of us weren't expecting that because we thought that banks were heavily capitalized already. But I guess, within the wisdom of the government and, of course, the central bank support, they believe that for Nigeria to, oil or to have the sort of impetus that it needs to push growth, then, you need banks to provide the sort of support that the economy needs. And so banks are now in a race to raise capital. And what is also interesting is that in setting the target for banks, the central bank has said, retained earnings weren't going to be considered, and that's a huge part of capital for a lot of banks. But it was pretty clear that what the central bank wanted was for banks to raise fresh capital. And by our estimates, we think that banks are likely going to raise over 4 trillion, close to even 5 trillion in general. And this is a 2-year target for a lot of banks. So pretty interesting times. We've already seen some offers go on already. Some banks are already out with their public offers and right issues. And let's also remember that this is also part of an effort to suck money out of the economy. We've got over or close to 100 trillion in money supply at the moment, and for a lot of people, that's probably what's fueling inflation as well. So by mopping this cash out, then you can make that part of your capital formation plans, and then move some of this capital into productive segments of the economy. So.
Nice one there. But let's look at the impact now on retail investors. How do retail investors view this recapitalization efforts? Are there any specific benefits?
Yeah, for some of the retail investors that we've spoken to, I think initially there was apprehension. And you can't blame them. Apprehension was mostly because of what had happened in 2007, 8, 9. I'm sure your fingers may have been burnt as well back then, if you were investing like some of us. So people still have memories of then. But I think the tide has changed now. People have come to realize that, look, investing is always going to be a long-term play, not a short-term play. And yes, you could always have, down times, but most times you do recover. And a lot of banks have recovered from those lows of that time. Banks all posted humongous profits last year and even into this year. Even banks have also posted very good returns in terms of their share price growth. And so for a lot of retail investors, they can see that some of these returns are positive. And then, of course, you also have banks that have been paying dividends for the last 10 years. So there are returns in terms of capital appreciation, and there have also been returns in terms of dividend yield. So retail investors are gradually warming up to it. I guess the only challenge is that they've just got several banks that are, all pushing for, capital investment. And that means that, with the little money you have to find a way to put that money into several banks or maybe into one bank, all part of diversifying your portfolio. But in a nutshell, I think it's been well received so far, at least from the feedback that we've gotten. And so, which is quite positive for the industry or for the market.
Now that UBA is about to float its own jumbo rights offer to existing shareholders, I don't know, how does this come to you? What is your take regarding this?
I mean, about time. UBA is part of the prestigious club of banks that we call FUGAs at Nairametrics. That's like the tier one bank. It's an acronym for the tier one banks. And I think we've already had 3 of the FUGAs already, launch their public offers. And I think apart from maybe Zenith, the others are pretty much done with their public offers. But UBA, I expect them to be announcing their public offers anytime soon, from what we gather. Probably in a week or 2 time, you probably hear them announce their public offer. We expect them to raise about 200 billion or so. It could be less, could be more, but that's our own estimate at Nairametrics over the next few weeks. And so interesting to see them also raise that amount of capital. We think it's a strong bank. They should be able to raise that capital easily, we think. Interesting times. And let's expect that, retail investors as well will participate. And the interesting thing is that it's not only retail investors, you're saying retail investors, you're also saying institutional investors' participation as well in some of these offers. And I think that is also going to be the case for UBA. What is interesting as well is the price. We've seen a lot of banks go into these public offers at prices that are, actually, what you would call undervalued. And I think even UBA is perhaps one of even the most undervalued of some of the stocks. I think, currently trading at about 24 Naira, which is less than 2 times the earnings per share. So when you talk about earnings per share, you're talking about how much the bank actually makes per share. So imagine that you're probably going to be buying shares in this bank at the value of that's commensurate with its profit. So it's almost like you're buying it at a steal. So interesting to see how this pans out, but we expect their public offer to be announced anytime soon.
About the current share price, would you say it's really attractive for investors, looking at the factors they will consider to make this decision?
Yeah, there are a lot of things that you look at when you want to buy stocks and when you're trying to look at the share price of the stock, especially maybe a stock like UBA. First thing you want to say, look, is it a bank or is it a company that has been, paying profits, that has been declaring profits over time, not just profit, but profitability growth? I think UBA ticks that box. They have been declaring profits and you've seen profitability growth as well over the years. In fact, last year alone, profits grew by 257%. Whooping figure there for the bank. Just last year, a lot of other banks also did well last year, but 257% last year. And of course, earnings per share last year was 17 Naira 49 kobo, 260% or so increase as well. Of course, gross earnings for the bank also hit 2 trillion last year as well. So in terms of the fundamentals, pretty strong. That's the first thing you want to look at. And you also want to check whether they are even actually rewarding shareholders, right? Because at the end of the day, if you're an investor in any company, you want to be sure that you're getting the right dividend. And so look at that number as well, and you see dividend constantly being paid over the last decade or so, never hardly missed any dividend payment. And even dividend yield, which is one of the most important things you should always look at. Dividend yield, totally, for those who might not know what it means, is essentially how much dividend you're getting, divided by the amount you pay for the share or the current share price. And it's almost like what you compare to a return that you get when you invest in maybe, or you keep your money in a fixed deposit, for example. So in terms of dividend yield, as at April, they were doing 11%, one of the best dividend yields that you can get in any banking sector at the moment. And so then you now look at the price to earnings ratio, which I mentioned earlier. So the lower your price to earnings ratio, the closer it is to 1, the cheaper that stock is. So in terms of price to earnings ratio, UBA is going at about 1.2 times. So it's almost, it's basically a value stock. Value stocks, if you follow Warren Buffett a lot, are the kind of stocks that he likes to invest in. So growth stocks are the ones that typically have very high price to earnings multiple. But value stocks, Warren Buffett believes that they're very resilient. They're mostly mature companies and companies that pay dividend a lot. And so it looks like this is one of those value stocks out there. And so in terms of share price, pretty solid for me.
Interesting. It's really getting more interesting. Now, looking at UBA's coverage area, I'm also excited. You're talking about a truly Pan-African bank. But really, how has this expansion strategy contributed to the bank's overall growth and performance?
Very good question. I mean, this is a bank with over 35 million customers, hitting 40 million customers. And of course, they've been one of the pioneers of Pan-African banking. They're not the only Nigerian bank that is Pan-African. You've also seen a lot of banks as well that are Pan-African. But I mean, UBA was one of the pioneers early on in their early years when they started. And so they have basically continued in that trajectory. I think by my own reckoning, UBA is in about 20 African countries, if I'm not mistaken, about 20 African countries. And in addition to that, you also find them in New York, they're also in Paris, they're also in Dubai, and even in the UK as well. So, I mean, it's a bank that has huge coverage areas. And what is also interesting is that a lot of their Pan-African banks are highly profitable when you compare it to some of the other local banks here who also have Pan-African banking, but not as profitable as UBA. UBA's bank do contribute over 40% or so of the group's operating profit as well. So solid expansion. And I mean, that, one of the things that we've always said in Nigeria here is we want to see more Nigerian companies leave Nigeria and go spread their footprints outside the country, because that is how we get foreign investment or foreign inflow, forex into our country, especially when those banks move outside the market. And we're seeing a lot of banks aggressively moving in this direction, and UBA appears to be one of those banks that are moving up. What is also, what also interests me with UBA is the ecosystem that is also around the bank and its sister companies. I mean, you very well know that this is a bank that is also majority owned by Heirs Holding or affiliated with Tony Elumelu. So if you look at the Heirs Holding itself as a conglomerate, and of course Transcorp on one side, so you see like there's a lot of ecosystem around that bank and their entire portfolio of companies that they can essentially feed on each other. So pretty much interesting. I think that there's a lot of potential with the bank to grow further than it's growing, but of course time will tell too.
Indeed, time will tell. Interesting stuff. Almost finally, let's look at the sector now competing with the fintechs and all of that. In this increasingly digital age, how do you think, or how has UBA been able to position itself to compete with these agile fintech firms, especially in areas of digital banking and, of course, financial inclusion? What's their strategy to stay ahead?
I mean, very good question. I mean, I did ask the CFO this question earlier in the year at a media parley, because I was a little concerned with how commercial banks are dealing with the rise of fintechs, or even new banks, as we do call them. And I think his message was kind of clear. His explanation was very, very clear. Essentially, the bank sees them as what you call frenemies. Frenemies essentially is that, look, they're not. Yes, you can have friendly competition where everybody finds some kind of value exchange for each other. So they basically co-compete and coexist within the same industry. So I think that's essentially what UBA is doing, availing its platform for some of these fintechs to ride on. And then, they all kind of have some kind of revenue share around the market. I mean, the market is quite huge for everyone. And important to also note that UBA's presence outside of Nigeria and in multiple countries in Africa also gives them an even larger market to play from a fintech perspective, especially when you talk about payments and transfers. So that also feeds into some of the revenues that the bank can make. Their Q2 numbers are not out yet, but I do believe that when their Q2 numbers are, you would see that they're probably one of the banks that have the highest income from e-business. We call it e-business income, electronic banking income. I think they're probably one of the highest last year as well. And so expect that growth trajectory to happen this year. What was also interesting is that I'd also asked him the CFO question then if there were plans to acquire a fintech. He said no. But here's what has happened now recently. I think one of the Heirs Holding subsidiaries is now a building into its own. So interesting to see how, like what I mentioned earlier, how they're essentially using value, as a bank, and they're using the entire ecosystem that they have around them to create value internally, and of course, much more value for shareholders. Like I said, still quite an undervalued bank. I do expect to see their valuation even go higher than what it currently is. Just also mentioned that I had even put them on the spot. I said, when is this share price going to hit 100 naira? And I said, who knows? Maybe it's possible.
I think they're optimistic that it will get there. Let's have a first offer outlook now. Looking beyond the potential public offer, investors often worry about what comes next. After the last wave of recapitalization, that's 2008, 2009, we saw a significant dip in share prices, which has left some investors cautious. Given UBA's track record now and current market conditions, do you foresee a similar scenario unfolding this time, or are there reasons to expect stronger performance from UBA in the long term?
I mean, brilliant question. I think the risk is there. There's risk that you could see depressed share price value. Now, let's understand that the Nigerian stock market is not isolated from Nigeria's macroeconomic challenges. It's all within the same bucket. So whatever it is that is happening on a macro level would always have effect on on the capital market. However, this is a different time. We're no longer in 2007-8. 2007-8-9 was a pretty much opaque period where there wasn't a lot of market transparency, there wasn't visibility, corporate governance wasn't really a big thing at the time. And then you also had a stock market that was heavily mutualized. But now you have a demutualized stock market. There's a lot of transparencies, there's technology. Look, Tolu, you can even go online and buy shares yourself. Don't even need a stockbroker now to buy shares yourself. A lot more information. There's also a platform like Nairametrics that would also break down some of these things for you. So there's a lot of information now that sort of de-risk some of the risk that we had before for investing in the stock market. So it's a lot better now. So I don't expect that we'll see the sort of crash that we saw then. Now, it doesn't mean that crashes are not synonymous with stock market. Even in the US, even in the UK, even in Europe, you do see market crashes sometimes. It does happen. But the key thing is, can they always recover? And I think where we find ourselves now in Nigeria is in the same place. So even if you see market crashes, actually see them as opportunities to double down on investments. And because you do know that their share price will always go up. So in this particular case, I do think not just UBA, a lot of banks are lowly priced at the moment. So that even makes the risk of a crash even quite limited, because where else are they going to crash to? What I do see is upsides. And let's remember that foreign investors are yet to come into the stock market. So by the time they come back into the stock market with the latest US Fed interest rate cut, like they always say in the crypto market, to the moon, baby.
It's a good way to live it. I must thank you so much, Mr. Ogodre Obichukwu, Chief Executive Officer of Nairametrics. Hope to have you join the program anytime soon again. We appreciate your time.
Anytime, just give me a call.
All right, then. All right, cheers. All right, interesting conversation there around UBA and what they offer. Well, let's take a break. When we come back, we'll talk markets. And Mr. Dele Sanusi will be my guest. He's an equities trader at Rostrum Investment and Securities Limited. Don't go away. This is Business Nigeria.